Hi, everyone.
Hey,
welcome to the Hash, your daily beat. Zack!
Doubling it up today.
We have
okay.
lovely
It's double the excitement. It's so fun.
Absolutely.
Anyway.
Well, my name is Naomi, Brockwell. We have Zack, Seward, Will Foxley, Sanasie, Ben Powers, and Zack. I'm just going to hand it straight over to you because today is an epic day for the crypto world, and you're going to tell us why.
The big day for suits everywhere, so I'm wearing a blazer just to be in the spirit of things. The big day today is Coinbase's public listing on the NASDAQ stock exchange. US's leading crypto exchange is going public. No shares have been traded yet in the coin stock, but they will be soon. We're seeing a bunch of prices bandied about. There was a reference price listed yesterday at $250. We're seeing various reports at this hour putting that price around $350, even upwards of $360. These would make Coinbase a major concern on the public markets, and people are very excited about it. Oh, and hey, Bitcoin is also trading near all-time highs right now. So there's a lot going on. I'm going to kick to the panel. What are we thinking of? What are we thinking of? It's listing day for Coinbase. What are we talking about? Naomi, what do you got?
What are we talking about? All right, so a lot of people have been talking about this as an IPO, so it might be good to just kind of talk about why it's not quite an IPO. So initial public offering, the idea is that this is a capital raising event, right? You put it out there and you get a bunch of public people who are buying in. So this direct listing that Coinbase is doing is not a capital raising event. So this isn't an event that is just going to fill the Coinbase people's pockets with money. Will help them raise money going forward, but that isn't the purpose of this listing. So it's important to talk about that, and maybe we could talk about how the price is determined as well, the difference between those. Zack, do you want to go into that?
Absolutely. So I talked to Coinbase CFO Alicia Haas last night. We talked for a few minutes. She talked about why they decided to do the public listing route. So public listings are still fairly novel in the public markets as opposed to an IPO, but she was very keen on stating, you know what, we're looking for a robust market here. We're looking for broad, deep price discovery, and we're not interested in doing an IPO and giving these shares to 10 mega financial institutions and seeing what happens after that point. So it was a very sort of conscious choice based on my conversations with the Coinbase team yesterday. It's something that I think they're very excited by. They think this is a maturation moment for the industry. They claim that this is about giving transparency to the crypto industry and giving greater assurances to their increasingly institutional customer base that they're going to be around for the long haul. So those are the talking points out of Coinbase HQ, which is indeed a remote first company, according to these SEC documents and all of their official press releases to date. That was actually a first for the SEC, which she also talked about, which was kind of interesting. But yeah, this is just gonna, this is gonna hit the market, and trading is gonna happen. We're still waiting for that to happen, and these valuation numbers are probably going to be quite large. But as it stands right now, it's a bit unclear. So I saw Jen's hand shoot up. What do you got?
So I just want to talk about a direct listing, Zack, and maybe you can clarify this for us. How this works is buyers set their bid and sellers set their offers. And then what happens next?
So I think yeah, Naomi, take it away.
Yeah, so there's this 10-minute period. It's like this display-only period where everyone puts in their offers, and then the listing decides whether or not, the NASDAQ decides whether or not it's going to go ahead. If it does, then they basically set the price based on those. And it's very different to an IPO where a group of investment bankers basically set the price and they get a percentage of it, et cetera. And so I think it was Noelle Atchison who said, this is actually really in line with the crypto ethos, this idea that, the price isn't set behind closed doors by an elite group of people. It's effectively set by the market, which is kind of what crypto is all about there. It's about open access and transparency, as Zack already said. So it is interesting that they've chosen this route. I think it's kind of cool.
So after that 10-minute period, is there a chance that they don't list?
I mean, I think technically, but they're going to list. Like, there's no.
Yeah, okay.
I think for all intents and purposes, no, there's not a chance that they're not going to. But I think technically there could be if there were some big discrepancy or some issue there.
Will, you shot your hand up. Go for it. Will, you are extremely muted, my friend.
He is very
Will, you're muted, bud. Unmute yourself, bud. Hit the button. Zoom
Well,
101.
while I was working on that, I think what really stuck out to me was kind of the valuations that were popping here. Like, you know, we talked about it, some of the listed prices potentially, like they could have a valuation equivalent to like BlackRock. Like that is wild to think about for a crypto kind of native company that's doing this. And it will make them a major, major player on the financial scene. So, you know, once they're in that position, which is going to be like a pole position in financial markets, like I'm really curious to see what actions they might take moving forward around, you know, because we also saw recently, right, they started the cryptocurrency innovation council or council on innovation, one of those two, but basically kind of as a lobbying group for the crypto industry. And this is going to give them real clout in government and let them weigh in on some of these regulatory debates that are going to keep going on. So that's what kind of popped out to me is just, you know, how big they're going to be and how they might start to throw that weight around.
Yeah. And it's interesting when we talk about this pop. Oh, go ahead, Will. He's back.
Oh, I'm back. Wow. How exciting. So yeah, to Ben's point, actually great that he went first because there's a pretty great list right here of the largest banks by market cap that are publicly traded. And Coinbase would be amongst these just by the numbers alone. So JP Morgan Chase, their market cap as of January 2020 was 433 billion. Bank of America, 306 billion. You keep going down, a few other names on the list. Coinbase is amongst those largest banks in the US and hence in the world, which is just wild to see. You know, 10 years ago, again, this was a company founded in a college dorm room, and now it is one of the largest banks in the world. And it's all brought on by the world-changing effects of cryptocurrencies. So I think that's pretty notable, interesting to see. Of course, those numbers are due to fluctuate once we see where the actual listing price is. But the fact that it's even in consideration for top 10 banks by market cap is just astonishing and kind of shows you like, we're not really early anymore, in my opinion, as much as people like to say that. We're definitely like mid-game here.
Oh, yeah, we're in the thick of it right now. And talking about what you were saying before, Ben, about the like price pop that you see when these things like go live. It's so funny because people always, I mean, a lot of people aim for that. They often, when they're behind closed doors and these investment bankers are setting this price, they often like slightly under count it because, you know, it's very bullish for a stock to suddenly see the price surge as soon as it goes live. And you don't have quite the same thing happening here. But like, that's always fascinated me that they would do that because it just means that they decided the price. They just got it incorrect and people lost money when they traded it. And, you know, it's always been a strange phenomenon, but I'll hand it off to you, Will.
Yeah, so staying in line with Coinbase yesterday decided to airdrop some of its shares to the employees. So there's 1,700 employees of Coinbase around the world, and they each received 100 shares of Coinbase stock before it publicly lists. That is a gift of about $25,000 if we kind of stay in line with the rough estimates. We're seeing about a $250 share or price per share beforehand. And obviously they can go upwards depending on where the actual price goes when it's listed. So this kind of brings me back to the DeFi summer where we saw Uniswap airdrop tokens, and token airdrops has always kind of been a part of cryptocurrencies, whether it's a hard fork or just a project trying to add community members. But here we have Coinbase kind of doing the same thing. So I like that kind of like that tag to the cryptocurrency community, like we're still part of you guys, even though we're listing on the world's largest capital market. So give it to you, Naomi.
I think it's adorable that you use the term airdrop when you're talking about giving people stock or stop options. Like it's such a crypto thing. Thank you. I appreciated that.
I think that is spot on. I think that is absolute. It is absolutely an airdrop of shares. So you're like, yep, here's 100 shares. Thank you for doing that. It's worth, you know, based on the reference price, it's a $25,000 airdrop. Do it with it what you will.
Liquidate or pump it, whatever you want to do with it.
But Naomi, I think this gets back to your point that you were making previously too about kind of like setting prices so that there's a price pop, like when these stocks go on sale. I think like, you know, similarly maybe Will with like the kind of airdrop metaphor here, you know, it shows just how important like perception and marketing are for all of these projects across the spectrum, right? Like the reason you do airdrops is to gain like users and to gain sort of like popularity and encourage people to migrate over from other chains potentially. And similarly here, you know, the reason bankers set these things is they're like, all right, we want this number to go up. So, you know, it just kind of shows some of the similarities maybe between decentralized world and the centralized one that we're going to continue to see.
I mean, I will say the true DeFi move here would have been to airdrop shares to users of Coinbase. That's what happened with Uniswap, which is quite remarkable, right? Like anyone who had ever interacted with Uniswap on any of their wallets was dropped like 300 Uni shares, I think, however many months ago that was. And those shares have, those tokens have increased in value. I know, I shouldn't have said, I'm so sorry. Hayden Adams, I'm so sorry.
That's embarrassing.
Don't mess me up. Don't mess me up.
A lot of crossover events going on today.
Shares are just like OG governance tokens when you think about it. You know, they entitle you to voting rights and all that stuff. So, hey.
Don't tell the SEC that.
Right.
Naomi, you go first, and I have a question for the group.
Yeah, I was just going to say, like, it's interesting that we're using this terminology and there's so much crossover and confusion, and it really speaks to like the regulatory environment around here as well, because, you know, we're trying to figure out what this world is, and already, you know, we're making mistakes in terminology and we're appropriating terminology from different areas. Like, this is an entirely new world that we have built, that we are trying to shoehorn into this existing financial system, which is, it's just kind of an interesting phenomenon, and we're trying to get clarity around it. And I just want to speak specifically about Coinbase. You know, they're a particular type of company. Like, I'm so glad the employees are getting shares in this company. What great news for them. Like, that's awesome. But Coinbase really, and I like Coinbase, and they really represent a certain aspect of the crypto space, which is that regulatory compliance, which is that towing the line. They've been able to prosper because they really did, you know, get their compliance really down early on. You have like, you know, an exchange like, you know, Shapeshift that does the opposite route. They fought the government at every step of the way. And then yesterday they just announced they completely eliminated KYC from their platform because they've, you know, implemented ThorChain, and now they're basically just a DEX facilitator, which is awesome. But two very different ways of approaching this. But Will, what was your question?
Yeah, no, just to tag on to what you're saying, it's a great point. I think like Coinbase is capturing that early startup feeling by issuing shares of its company to its key stakeholders, the employees, even so late in the game, 10 years after, and when it's going public, or 10 years after it launched and now it's going public. Question for the group though, what do you think will happen with a lot of these larger stakeholders? Do you think they're going to hold onto their Coinbase stock? Do you think they're going to liquidate for cash? Or do you think they're going to flip it into crypto? I think we might see a lot of the latter from some of like the crypto insiders who are just kind of seeing Bitcoin's price rising right now.
I mean, counterpoint to that, we had DCG's co-founder and CEO, Barry Silbert, on First Mover this morning. You know, disclosure, DCG owns CoinDesk, but he said, you know, tweeted out also just saying like, good luck buying Coinbase from me for $250 a share. Like, he seems like he's going to be holding onto this stock. And so, you know, given he's kind of like a crypto OG in some of these ways and traffics heavily in cryptocurrencies, like maybe that won't be the case. You know, maybe this is just another foothold in a more mainstream financial institution now for, you know, Silbert to kind of hang on to.
And it's a great question as to what direction regulatory climate is going in as well. Like, you've got SEC going after Library, going after, you know, XRP, Ripple, I should say. And so, you know, if the SEC does start clamping down on all of this, it could mean bad news for like Coinbase's business model, because they'd have to start delisting a whole bunch of stuff. But honestly, I agree with Barry Silbert. I mean, I think things look pretty bullish for Coinbase right now.
Well, I hope some people take some money off the table and just like, you know, treat themselves, you know, just treat yourself. That should be the motto for early Coinbase shareholders today. All right, well, we're going to take a quick break, and we are going to go talk about Dogecoin when we come back. Bitcoin is up. Coinbase is popping. Dogecoin is also popping. We're going to talk about that. It's going to be fun. All right. See ya.
And welcome back to The Hash. And we're going to keep mixing it up today. Speaking of the world of traditional finance, stonks, and DeFi, Binance's coin BNB has hit an all-time trading high in advance of this Coinbase listing. And simultaneously, Binance has announced that they're going to be listing the coin token for trading on its platform. Following its announcement Monday, that they would be listing Tesla as well, so that people could trade in these sort of like pseudo token stocks, on their platform. So, group, what do we think is driving BNB to an all-time high? And then let's dive into how this may or may not relate to Coinbase and all the other ripple effects of this sort of climactic day that we're seeing. But Will, I want to toss this to you because I know you've been looking at Binance before.
No, it's interesting to look at the history of Binance here. I think they launched in 2017. Changpeng Zhao was from a different exchange. I think OKX. Someone can correct me on that if I'm wrong. Beforehand, and they went to Binance, and then in 2018, I think it was late 2018 or early 2019, they launched the BNB token, and it sold in its initial coin offering, went out in like 90 seconds. Like that's how quickly it sold out, and it was trading for about $20 per token for like quite a while, for over a year. And then this past year, it has just taken off along with a lot of other cryptocurrencies out there. So it's interesting to see how a token like BNB is a good proxy for the valuation of Binance, which is the largest exchange in the world by volume. Of course, it has a different market than Coinbase. Coinbase is very US centric, follows all the laws of the US to a T, even has handed over customer information to the IRS without being asked to do so. But Binance, on the other hand, is hopping from island to island, trying to keep its exchange alive and just adding like all these different parts to it, from Binance Smart Chain to its Venus project for adding stable coins from every different country. So two very different business models, but the tokens, of course, are going to rise in a similar manner because they're both addressing markets that want exposure to crypto. US investors want exposure to crypto in a regulatory friendly way. The rest of the world just wants exposure to crypto, and Binance is there. And that's why I think you see that token rise alongside coin.
Yeah. And I mean, maybe the one similarity in those two instances is I think both companies would say they are, quote, headquarterless in this sense. But it seems like, this is up 14-fold over the year BNB is, which is so interesting. It's up more than, Bitcoin relatively in terms of the percentage increases it's seen, which seems to be largely driven by Binance Smart Chain and DeFi. Zach, could you speak a little bit to this and what might be drawing customers to Binance Smart Chain?
Yeah, so Binance Smart Chain, what it lacks in decentralization, it certainly makes up for in ease and pain-free fees, right? So I think what we're seeing in Ethereum right now is that it's a bit of a victim of its own success. There's a ton of blockchain congestion on that network, and just the cost of getting anything through Ethereum right now is quite high. Ethereum proved out that, DeFi is attractive to people, and it can be a very, rewarding place for people to invest their assets in various ways, shapes, and forms. And BSC, to its credit, has done a good job of replicating some of those successful platforms without the pain of having to suffer through a lot of gas fees. So the fact that they're sort of adapting that playbook to that chain, I think, is really interesting. And certainly for me, just like this base layer, these base layer wars that we're going to see over serving this big, $50 billion DeFi market is going to be really interesting. And I think BSC has sort of taken the lead with PancakeSwap and other platforms that are drawing users to that ecosystem.
It's interesting because isn't Binance Chain, aren't the fees there as well? Isn't congestion starting to become an issue there? Like it's almost like there's built-in decentralization in the crypto world where, Ethereum, scaling, it hasn't happened yet. So people move to Binance, and then Binance, congestion happens. Maybe they'll then block to another chain. So you end up with actually a bunch of decentralized, a decentralized environment with a bunch of different chains, which is kind of cool. But Will, I saw your hand go up there.
Yeah, I can speak to that really quick before I give it off to Jen. Binance Chain is seeing two issues right now. One is state growth, which is every time you add a transaction to a blockchain, you have to record that somewhere. And if you keep recording and recording and recording, eventually you run out of space to hold those recordings on a blockchain. So you have to figure out how to record that information well so you can run a decentralized network itself. And it's quickly becoming a problem where only Binance and Amazon are going to be able to run Binance Smart Chain soon. which is kind of funny. But another issue you're seeing here is that gas fees are priced in dollars. You might have like MetaMask or whatever might show you the price in Ether or might show you the price in BNB, but when retailers are looking at it, they see dollars. And as BNB's price goes up, so does the cost of interacting with Binance Smart Chain. So just your 2 points there, but handing off to Jen.
Well, my question was actually for you based on what you said earlier. I want to talk about these fractional coins. So we have Tesla and Coin fractional coins trading on Binance. Do you think this is going to bring more people over to the platform? And why is this not related, do you think, to the increase in the BNB token?
So I don't know about the second part of the question with the BNB token. I think that everyone wants exposure to US companies, but not everyone can get exposure to US companies. If you want to purchase a share of something that's listed on the NASDAQ or New York Stock Exchange, you necessarily need a US bank account of some sort. But if you have an FTX account and you live somewhere not in the US, you can easily get exposure to US capital markets, which in itself is just amazing and great and a very good way for people to kind of pull themselves out of whatever situation they're in, because they can get exposure to these capital markets, which have done that for US citizens over the years. To your second question, I'm not quite sure what you're getting at there, so you can help me out.
Yeah. So Ben, did you want to jump in?
No, I was going to say, I actually think we got a transition, but I do think it is no coincidence that Tesla and Coin are going to be listed on Binance in this way, given they are two crypto appealing companies, let's say. But Jen, Doge is barking yet again. Tell me what's up with this.
Ben, I can't believe you cut me off. I mean, I guess we have forever.
I'm handing it right back to you.
Okay, so you might have bought Doge as a joke, but today the price is no joke. Dogecoin hit a record high on Tuesday, and we've been talking about it the entire show. Bitcoin and Ether also reached all-time highs. Everything seems like it's at an all-time high today. Why? But why? My question is why? Why is Doge rallying? And I don't really have an answer. I initially thought maybe people thought that they could trade Doge on Coinbase, which they cannot, but I don't know. Do you guys have any thoughts?
That's a great question. I mean, it's been very, like, people like Elon Musk have been very public about Doge. It's in the people's mindset. So maybe, I don't know, maybe people are excited and riding on everything. Like, I mean, when things like this happen and when you have random coins kind of start to appear in the top 10, it always makes me take a second to say, are these numbers real? And actually, Zuko had a great tweet where he said, you know, if he's trying to figure out the correct state of the markets, he looks at Messari's data set and filters only by coins that have a market cap of over $1 billion, real volume of over $100 million a day, transaction volume of over 100 million a day, and payments of over 10,000 a day. And so I was like, I'm going to check out the Doge, like what's actually going on there. And sure enough, it's still right up there around the same position it is in, say, coincap.io. So, you know, these numbers are real for Doge, and I'm so confused.
And I think what's confusing here too is we're seeing this
more seriously.
No, but I think what's so interesting here is we're seeing this immediate spike, like right now, as Bitcoin is also booming. Because for a little while there, Bitcoin was kind of hovering around that 50,000 range, and you were seeing a little bit of an alt season with altcoins sort of rising as people were looking at trading those as Bitcoin was settling for a bit. But now Bitcoin's on the move again, and Doge is kind of moving with it. So that's just a bizarre thing to me. But, you know, Zach, what are your thoughts on this one? I know you had maybe some counterfactuals here.
I don't know about counterfactuals, but yeah, okay. I think it just like goes to, I don't know, like I think I too am confused. I share Naomi's sentiment. You know, it's really hard to attribute causality in some of these markets. And I think like people have often fallen into the trap of over indexing causal relationships in crypto. I know I have, you know, like I want to be able to like, well, it's happening for this reason. And sure enough, it's something that's totally not on my radar and is probably more significant for, you know, whatever is happening in the market than I would have assumed previously. So I think like maybe there's like ambient awareness of crypto and Bitcoin, and maybe Doge is sort of an on-ramp for the crypto curious when like it starts bubbling up into more mainstream conversations. But again, those are like heavy maybes, and I have no really insight into why or how Doge does what it does. But Will, I saw you had something.
Yeah, really quick before Jen. That tagline, like the tide brings in all boats or whatever it is, or tide lifts all boats. Butchering that right now. I think it's just true here. Like if the price of Bitcoin goes up, then everything else is going to go up. And like, let me just read you really quickly, like today's top gainers. It's like 56% for the token liquidity. Has anyone heard of that? Probably not. The Foon token has gained 36% today. The DayQ quote token, yeah, Foon token, THOON. So it's just like random tokens just go off. It's just, that's just the nature of crypto. It's not necessarily, there's no sense to it. It just happens, and that's part of the fun.
Going off of what you were saying, Zach, I think people are probably, no worries. People are obviously hearing a lot more about Bitcoin, especially with Coinbase listing today. And maybe they're starting to learn about Bitcoin, and they maybe don't understand that, you don't have to own one whole Bitcoin to participate in Bitcoin. And Doge is cheaper. Elon Musk talks about it. Mark Cuban talks about it. There's a cute dog attached to it. Maybe it is that entry ramp, and people are seeing it as something that they can participate in when Bitcoin seems a little bit more unattainable.
Oh, those people need better education.
I agree.
Oh, yeah. Gosh.
I think it could certainly be that. I mean, it could be that. It could be something else. It could just be like people on Reddit, like talking, or I don't know, people on Discord or wherever. But I think, yeah, Doge could certainly be like, we talk about like fiat. We talk about fiat on-ramps often, but like Doge, again, could be like the on-ramp to the crypto ecosystem for a broader audience. And if that's the way it is, that's the way it is.
Yeah, well, I'm gonna take us away from Doge right now, and I want to move into SEC realm. So, some news from Hester Peirce. Now, Hester Peirce is renowned in the crypto community as Crypto Mum, and she's awesome. You don't often hear me speaking accolades to people in government, but Hester Peirce has done her best to really try to promote cryptocurrency and freedom, and just has done some really awesome things. One proposal that she put in 2019 suggested this 3-year grace period for blockchain projects that would allow them to kind of move away from a centralized structure into a more decentralized structure, and potentially avoid having to go through the rigmarole of registering as a security or avoiding the US altogether. So she's actually just published an update to that, which talks about, regular reporting that these companies will be doing every 6 months. So I do want to talk about this. I think that this proposal, it would be amazing if this goes through. I mentioned earlier in the show about Library being targeted right now and other lawsuits that the SEC is coming down on. They're investigating so many companies in the crypto space right now. And it's like, it kind of gets scary when you look at the Library ruling and how they're determining what's a security and what's not, because it really could apply to so many things in the crypto space. So I just think the safe harbor idea is so important, would be amazing. But I'm going to throw this to the group. Ben, what are your thoughts on what Hester Peirce is trying to achieve here?
Yeah, I think this just makes a lot of sense. I particularly appreciate like the regular update aspect of this, in which companies would have to, obviously give you regular updates about the progress of what they're developing. These things take time. Like even, after ICOs, they then have to go and develop and like roll out and scale these products. And, I think that's completely reasonable. I also think it's completely reasonable to have kind of legally mandated updates rather than dropping a blog post every once in a while or something like that. So, I'd be really interested to see how this goes and see, we had a huge run on ICOs in 2017, and a ton of them just fell by the wayside. There were also a lot of scams involved and things like that. So this seems to be a way to offer up the appeal of ICOs within a framework that makes people actually accountable for the products they're developing, and, gives consumers maybe some trust in what they're trying to do. So I think that's really important, and I'd be really, really interested to see how this goes, because I think it sounds really promising.
I will mention, I said Peirce, it's Hester Peirce, but I'm going to blame it on my Australian accent. But I will say, so this new version she's put out, it says that as well as these regular updates, they'll have to find outside counsel to explain whether or not their network could be considered decentralized. And they determine decentralized by various different factors. That is such a crucial aspect of this, because right now, you have to have a period where a project goes from centralized to decentralized to create create a truly decentralized project from scratch, it's almost impossible. You have to have, anonymous developers working on the project. And even then it's still centralized within the hands of those developers, right? So, there's always a period where projects grows from being very small to larger and incorporating more of the wider community. And so she's just recognizing the reality of this situation and saying, during this period, we will allow people to experiment. Otherwise, we're going to be shutting down innovation that might otherwise have bloomed. Zack, what are your thoughts?
I don't have a ton of thoughts on the substance of the document itself, but I did see something that was really cool that speaks to this sort of soliciting community feedback point. So I think this came out last night, and a version of it was posted on GitHub, which is obviously a popular code repository for developers across the world, and especially in the crypto ecosystem. So, basically it's posted on GitHub so that you can propose changes to the document in a very sort of developer friendly way, right? You can say, okay, here's the existing text. Okay, here's a proposed change. And at some point, presumably, staff at the SEC will sort of look through it and incorporate any changes or seek feedback from those people who have submitted those proposed improvements. And I think that's a really cool sort of like civic tech hack that the SEC is rolling out here, that Hester is rolling out, and for them to solicit feedback in that way seems pretty savvy, and it seems like a pretty good way to sort of like engender goodwill and make sure that this process gets updated to the best of its ability. So that's what caught my eye here, but I'm sure there's more to be discussed.
Yeah, I think that if this goes through, it will change the crypto space, because we're not just talking about the SEC targeting projects that have already started. We're talking about people who might choose to innovate, but then they decide to go offshore instead and take their business out of America. People who decide just not to get involved at all because it's just too difficult to figure out the regulatory compliance. And so I think that it would just create a real boom in innovation, especially in the United States. But I think that it will help the crypto industry as a whole. But Jen, what are your thoughts on all of this? Do you see the future as being SEC as a friendly towards crypto institution, or are we dreaming big? Are we looking at this through rose-colored glasses?
Well, reading this story made me so happy. I didn't think it would, and it is exactly what's needed to foster innovation in the space. I am curious to see what is going to happen next. I feel like we get these little nuggets of hope, and then a whole bunch of things happen that like make us take maybe a few steps back. But this is definitely a great sign, and I'm happy to see what happens next. Yeah, Naomi, you want to add on to that?
Yeah, I'll mention that Hester Peirce, oh my gosh, Australianism, so I blame it on that. So it seems that she is prepared to work with Gensler on this and collaborate and figure out a good direction for the SEC. So I'm so happy that we have her guidance. She's been voted in until like 2025. So it's great to know that we have that runway with her. But just a side note, Gensler apparently is being sworn in today. There was a vote like 15 minutes before the show started, and so he will be our new SEC chair as of today. So we'll see what direction the organization goes in. But Zack, you want to take us home?
There's so much stuff going on in this market. It is just crazy. For the rest of the day, we're going to be doing a lot of Coinbase coverage. This is a big moment for the industry. Stick with us on CoinDesk.com and on CoinDesk TV throughout the rest of the day for all the latest and greatest on coin hitting the public markets. Thanks for being with us today on The Hash. We'll be back tomorrow to talk about more stuff, and have a great day. All right. Bye.